Hey, what's up, guys? So in this video, I'm going to be going over bullish market conditions. And it's kind of annoying because I literally recorded this video, but I think I saved another video on top of it. So it's kind of annoying. But okay, so when it comes to bullish market conditions, it is a market that is overall controlled by buyers. Bullish basically means that there are more buyers in the market. Price is coming from a lower level to a higher level. So in a bullish market conditions, these are the key terms that you guys want to look out for, or that you want to keep in mind during that process. That's going to be HL, which stands for higher lows, HH, which is higher highs. These are the keys that I write when I'm writing my notes in my journal or when I'm doing my pre-market analysis, so you guys can follow that. So we have higher lows, higher highs. We have lows, equal lows, highs, and equal highs, right? So overall, guys, if we're going to keep this very simple, we're going to start out with drawing it out. A bullish market condition looks something like this, where you have a low point, you have a high. One second, this tool. Delete this one. So you have a low, you have a high, followed by a higher low, higher high, higher low, higher high, higher low, higher high. Now, when we draw this out, this is just a low point. This is just your starting point, right? This is a new high only because, again, obviously it is higher than where we were when we were at the low point. This area is considered a higher low because it is higher than this previous low down here. After this higher low, the market took out this high area here by breaking out of it to the upside and making this new higher high, right? Now, this is a higher high because it's higher than this previous high down here. After we made a higher high, the market pulled back, corrected itself to form a higher low, followed by a higher high, followed by another pullback to form a higher low. And as you guys can see, these higher lows are obviously higher than all the subsequent low points, right? So now this is how the market moves on a bullish market condition in a very simple form. But guys, keep in mind, it could look very complex, like things like this, right? Which is still the same thing. It's just that there are other points of structure you might have to go and look out for. So you have a low, you have a high, you have a higher low, higher high. We have a higher low because it's higher than this previous low again, guys, right? And then we have a lower high because it's lower than this previous lower high up here. But we are still bullish because the market is still maintaining the structure, which is this higher low point over here. We then made this area, which is then considered a new low or an equal low, followed by this being a new high because this previous high over here is still being respected and maintained. So this is not a higher high, it is an equal high, guys. This area is a higher low because it is higher than this previous low here. This is your new higher high, followed by a higher low, equal high, higher low. It is slightly higher than this previous low here. That is why it's considered a higher low. We have a higher high, higher low, and a higher high. So this is just a more complex version of it, but it still means the same things, guys. So now we're going to go to the charts and we're going to look for an example. So right now we're on gold. So you guys can see right here on gold, we'll label this, but I'm going to use this path tool. Remember I told you guys, if you guys go over here, where it has the brushes, the arrows, if you go down here, you're going to have a path tool where you are able to star that and you're going to be able to use it to do things like I'm about to do here. Make sure you guys are in drawing mode, which is down here in this area. That just allows me to continue to draw points without having to start over every time like this. Well, not like this, but like this. Like if I use this arrow, I draw one, I have to click it again to draw another one. But if I am in drawing mode, I can draw as many arrows as I want until I right click on my mouse and now I can't draw any more arrows. All right, so let's use that path tool to label these structure points. Obviously, guys, over here, we were on a bearish trend. We had a lower high, a low, lower high, higher low, lower high, lower low. Now this lower low, guys, for this uptrend that I'm about to show you, or this bullish market condition, this is the low point that I'm talking about. This is your low. This is considered a higher high because it is higher than this previous high here. This is a higher low. This is a higher high because it is higher than this previous higher high here. This is a higher low, equal high, higher low, lower highs. These are equal highs, but they're overall a lower high. This is a new low followed by a higher high, higher low, equal high, higher low, higher high. So now if I move this off, what do you guys see? You have a, well, you have a low, a high, higher low, higher high, higher low, equal high, higher low, lower high. This looks like a lower low, but if you drew a area of support, this area is tested. It is not broken. So this is just a new low. It is not an equal low. It is just a new low. This would be your higher high, higher low, equal high because it is equal to each other. This is your higher low and this is your higher high. So now you guys can see that this is a bullish market condition. Let me get rid of this 1 second. Why is it still trying to delete that? There you go. All right, I just wanted that to stay there. Okay, guys, so let's just go through another section of the charts. Matter of fact, I'll just switch to time frames. Let's go down to the 4-hour time frame right here. I caught this already. And there you guys go. So, right, as I'm doing this, guys, the way you see me going about it using the path tool, this is how you should go about it yourself to practice what you see, to get that mental repetition in. Because overall, guys, what happens as new traders, you guys are going to try to rush the process where you're like, man, I just watched Carrington's video and I saw the bullish market conditions and the bearish market conditions. I'm going to go and rush and try to trade. Where if I throw out random charts at you, if you're not able to quickly find me these bullish market conditions, these bearish market conditions, and correctly identify these points of structure throughout the process, then I'm going to tell you guys that you're not ready and you should go back and get that chart time in. Just think of chart time as just like you getting that repetition and that exercise mentally so you can train your eyes to be able to see these things as fast as I'm able to see them. So again, guys, so this is a low, this is a high, higher low, higher high, higher low, lower high, higher low, higher high, higher low. This is an equal high, higher low, lower high, higher low. This is a higher high on lower time frames, but on the 4-hour time frame, this is all still a lower high. But you'll just look at it that this is a new high, a higher high for compared to this point. So this is a new low. This right here is a equal high, higher low, higher high, higher low, higher high. So again, guys, this is a bullish market condition here. And before I answer this question, or before I tell you guys what this is, what do you guys think this is? From this point to all the way up here, is this overall a bullish market or a bearish market? And is this a bullish market condition or a bearish market condition? I'll give you like 2-3 seconds to answer, or you could pause the video. If you guys want, you guys can pause the video here and try to label these points using your tools like the text box, where you're able to do things like this is a low. All right, so let me make that a little bit bigger. All right, so this is a low. And technically, this is actually a higher low because it's higher than these previous lows, but we'll just call this a low for now, just to go with the flow of what we're doing. You have a higher high, and that's a higher high because it broke all these lower highs down here got taken out by this higher high. This area here is a higher low. This here is a lower low on this 4-hour time frame because this higher low did make a higher high. So this area here is a higher high only because it closed above and it made a new high, obviously. So you have a low, a higher high, higher low, higher high, lower low. So the market shifted slightly, but overall, we still continue to maintain that bullish flow because price was still continuing to trend overall higher. As you guys can see here, here. So for the most part, during this whole point, after we had this low here on November 22nd, well, November 28th, 2022, price was ultimately bullish. So you could have been really looking for more bullish trend moves throughout this whole process. But obviously, guys, this is just a quick video on how to identify bullish market conditions. And like I said, guys, bullish market conditions are where the buyers are more in control than sellers. We are getting more orders of buys coming into the system, which is what's causing price to trend upwards, as you guys can see over here. And as you guys can see over here, ultimately price did shift directions here, making this lower high, lower lows, and then continuing to flow downwards like you guys can see here. But again, guys, this is the video. I want you guys to try to do what I did in this video. Go over to any pair, whether it's a currency pair, commodity, whether it's a indices, I don't care. Just go through your pair and break down the bullish market conditions the way that I was able to do it, using the path tool, using the text box, and just get that mental repetition in where you keep saying higher low, higher high, equal low, higher high, over and over again until it becomes second nature. Because like I said, guys, the more you practice, the easier it will be to see this live. Because when you are trading live, like you can see here, the market is 5 o'clock, right? So the market's currently at that state where it has that pause from 5 to 6. But like I was trying to say, guys, when the market is trading, like moving live, there is no candles here. So you're using this historical data here to be able to understand by analyzing what you see, to be able to anticipate and make calculated guesses of what you think will happen in the future. So the better you are at studying this historical data and getting your repetitions in, the better you will be at live trading. Obviously, that all depends on you. So see you guys in the next video. Peace.